Sudip Bandyopadhyay is joining us now to talk about the chemical space. Yesterday, the industry leader came out, UPL came out with a weak guidance, but the stock did not really fall a whole lot. In fact, right after that, we also saw buy calls start coming in by some of the brokerages that in the second half, the inventory levels are likely to improve and pricing after some more pressure, a few months may start improving. So there's a view that probably this bombed out space is a good candidate for looking for value. Others are saying, no, you should stay away till there are clear signs of bottoming out. So we'll start with sector major UPL. For long-term investors, Sudip, thank you very much for your time. Do you think UPL is a good stock to buy in the sense the kind of guidance they've told about the second half improvement, cost-cutting measures, all of that? In this 50% fall from top, do you think everything is priced in?
Absolutely. I think Ajay, UPL is a fantastic company. This is one of, I think, amongst the top 5 agrochemical companies in the world. The last acquisition led to a lot of debt coming in the balance sheet. I think what good thing they have been doing is they have been reducing the debt continuously and in a systematic manner, which is an excellent thing for the company's balance sheet. As you rightly mentioned, there are major steps on cost reduction which are being taken. They plan to take out about $100 million worth of cost over a period of next few months. Inventory liquidation also is a major focus area for UPL and many other chemical and agrochemical companies. The challenge for these companies have been because of intense competition from Chinese manufacturers and low demand in their markets like Europe, US and other global geographies because of recession-like atmosphere in these countries. Now, if somebody is going to buy for short term, I would say don't get into it because I think it will take some more time before they recover, the demand recovers and the business and the volumes recover for these companies. But if somebody is a long-term investor, he has, let's say, 1 year plus time horizon, UPL is a fantastic buy and they should have it in their portfolio. As I mentioned, they are one of the largest agrochemical players in the world. They have a very diversified, geographically diversified business, which is fantastic for this space. And they're doing all the right things like debt reduction, cost cutting, inventory liquidation. So UPL definitely one can buy for long term.
Right. Sudeep, when investors go about looking for value, they often start looking at areas which have given a lot of steam. Hikal, pull up that stock and we would talk about how the stock has really halved from top. Is that a good one to get into?
No, absolutely not. You just don't try and catch a falling knife. There are multiple reasons for this stock to come down. I think last week only Gujarat Pollution Board stopped operations in one of their Gujarat facilities. National Green Tribunal has repeatedly pulled them up. These kind of interruption, these kind of regulatory challenges are not good for business. Also, I think the elephant in the room is the fight between the promoters and the way the shareholding is poised with the Baba Kalyani Group holding 34%, the Hiramat family holding about 34%, and the public residual. It will be extremely difficult for the company to even pass a special resolution for any business. So it's a completely avoidable counter. From I think June 21, the counter is only one way moving down. So it's about 2 years the counter is seeing decline. And unless the challenges and the promoter issue is resolved, I don't think investors should get into it. It is available cheap and prices have come down, but it's definitely not advisable to enter this counter till the issues are resolved.
One were, take devil's advocate, somebody has already bought into it. How long can the uncertainty last? What should the investor be doing?
Ajay, I don't think one should speculate. There are multiple other counters. If somebody is stuck there, they should probably sell and exit. These things you cannot put a timeline to it, and I definitely cannot. Management focus is not there. This fight between the promoters, I think, is taking its toll. If you look at the board of the company, I think it's not a very satisfactory condition vis-a-vis corporate governance issues as well, with most of the directors having tenure of 20, 30 years and very, very senior individuals. I'm not sure about the independence of directors who spend 20, 30 years on the board as well. So there are multiple challenges on the governance front and management front. So it is definitely avoidable, and somebody stuck, I would recommend they sell and exit. Rather they go and buy UPL, as we were talking about, if they are really interested in agrochemical and chemical space.
Right. All right, Sudip, we'll let you go on that one. Thanks so much for joining us on the show. That was a call on the space and also how sector leaders should be seen, some other underperforming stock, how should they be seen in the space.